Good evening, everyone. Welcome you all to the third webinar in the series of CSR program that we have started at Mehta and Mehta. We have already, as you know, we have already discussed on the evolution of CSR and applicability of section 135 in our previous two sessions. Today, we will be discussing on the expenditure part and the penalties part. So as you know, we have broken down this series of webinar for CSR into important concepts. So today we'll be only discussing on the expenditure part and the penalties part. So I would request the panelists to ask more and more questions regarding the same. And in the forthcoming sessions, obviously, we'll be tackling more important points under CSR. So to support us today, we have our Rakesh Kumar sir, he is a CS of Star Union Dai-ichi Life Insurance Company, as well as he is a managing trustee of Sud Life Foundation. In his career spanning over 2 decades, he has a rich experience in handling corporate governance and compliances of Companies Act, SEBI, and CSR related activities. He has been handling CSR related activities for the past 9 years in his current organization. Further, it is a privilege to say that he has been awarded with Governance Professional of the Year award by ICSI in the year 2019. Further, he was also awarded with Leadership Excellence in CSR Award by Best Employer Brand Awards and many other several recognitions to his credit. We welcome you, sir. Today we begin. The format would be Dolly would be presenting the CSR concepts, that is expenditure and all. And wherever required, questions can be raised during the session as well in the chat box, as well as you can unmute yourself and ask questions. Over to you, Dolly.
Yeah. So first of all, good evening, everyone. We welcome you on behalf of Mehta and Mehta in this webinar. Am I audible?
Yes, you are audible.
Okay. So to start with, in previous CSR webinars, we have started with the evolution of CSR. And later on, we have covered the topic of CSR committee, applicability of CSR and the CSR policy. So moving onwards, today we will be covering another topic, that is the CSR expenditure and penalty. I hope it is visible to everyone.
Yes.
Yeah. So talking about today's topic, we'll be starting with the CSR expenditure and penalty. So as you know, in Companies Act 2013, under section 135, there's a section for the corporate social responsibility, and also MCA has introduced the company's CSR policy rules in 2014 along with Schedule 7. In continuation with that, today we have covered the topic of subsection 5, subsection 6 and subsection 7 of section 135, which talks about the CSR expenditure, the effect of excess amount of ongoing project, unspent amount, and also the penalty. So to start with, first let's understand the meaning and the definition of CSR given under the Rule 2 of the definitions. So it says CSR means the activities undertaken by a company in pursuance of its statutory obligation laid down in section 135 of the Act in accordance with the provision contained in these rules. And in the definition, it is given what should not be the part of CSR or should not be considered as a CSR. So the first thing is activities undertaken in pursuance of normal course of business of the company. So basically this the activity which corporates are doing in the normal course of business, it won't be a part of the CSR, provided that any company engaged in research and development activity of new vaccine, drugs, and medical devices in their normal course of business may undertake research and development activity of new vaccine, drugs, and medical devices related to COVID-19 for financial years 2021, 21-22, 22 and 23, subject to the conditions that such research and development activities shall be carried out in collaboration with any of the institutes or organization mentioned in item 9 of the Schedule 7 to the Act. So basically here, the companies which are involved in the development of any activity of new vaccine, drugs, and the medical devices. Specifically, this provision was introduced in 2020. This provision was related to the COVID-19 situation, and they were allowed to, do the develop the vaccine, drugs, and medical devices for this financial year 21-22 to 22 to 23. Also, they are supposed to give that activity separately in annual report on CSR included in the board's report.
Just 1 minute, Dolly. Just
Yeah.
1 minute.
Yeah.
Ashwini, I have seen a lot of questions are coming in the chat box.
Yes,
being
sir,
a
yes.
moderator, you have to see that which slide it relates to, and accordingly you may put the questions. Okay.
Yes, sir. I will intervene accordingly.
Fine. Thank you very much, Ashwini. Go ahead, Dolly.
Yeah. So second activity which should not be form part of the CSR was about any activity undertaken by the company outside India, except for training of Indian sports personnel representing any state on union territory at national or India at international level. So basically, if a company is spending on the training of Indian sports personnel representing any state or union territory at national or international level, so that expenses will be get considered as a CSR expenditure. The third point is contribution of any amount directly or indirectly to any political party under section 182 of the Act. So basically, a contribution to political party is not allowed in as a CSR expenditure. Activities benefiting employees of the company as defined in clause K of section 2 of the Code on Wages 2019. So any activities which is benefiting the employees of the company, again, it is not a CSR. Activities supported by the companies on sponsorship basis for deriving marketing benefits for its products or services, and activities carried out for fulfillment of any other statutory obligation under any law force in India. So basically, these 6 activities are not considered as a CSR activities under section 135 of the Act. So moving onwards, let's understand about the net profit definition given under
Dolly,
the
1
Rule
minute,
2.
1 minute. Before you go to net profit, let us discuss a bit more about corporate social responsibility. Please go back.
Yes, sir.
Previous slide.
Yes, sir.
See, good evening, participants, and I would like to draw your attention for one thing definitely is that any activity undertaken in pursuant to the normal course of business of the company, it is not a corporate social responsibility. This one has to understand very clearly what is normal course of business of the company that you know better than anybody else. Number one. Number two, similarly, if you are under obligation, under any kind of sectoral regulations also, and you are discharging that obligation, that is not a part of your CSR. The exemption as far as the COVID vaccination is concerned, which has been given, this is up to 31st of March 2023 only. So in about a few days, it is going to be over. Then comes about the next slide, Dolly. So any activity undertaken by the company outside India, several times I have been asked one question that we are having branch offices or we are having subsidiary companies of ours abroad. And if we do the CSR overseas, what is the problem? Whether it is a problem or not, that is not the question. It is not permitted. Under the rules, it is very clearly says that any activity undertaken by the company outside India is not permitted as a corporate social responsibility, except for training of Indian sports personnel. Even this training of the sports personnel also, provided they are representing any state or a union territory or at national level or international level. That means what? Simply, if you say that, look, I am running a sports organization and all abroad, it is not covered. Suppose I am sending, suppose, say for example, I am developing a team which is a completely private, just like for your IPL or kabaddi matches or something like that, and sending your people for training abroad, whether are they covered? They are not covered as a CSR, because only the sports personnel who are representing the states or union territories or at national level or international level, if they have been sent abroad, their training expenditure will be covering under the corporate social responsibility. Then, of course, that political party, any kind of that bonds and all, if you are purchasing it and giving it to any political party directly or indirectly, it is not covered under CSR. Again, the same thing, several times the question comes that there is a lot of pressure is there on the CSR team by some politicians. You give the money to us, we will spend the money for CSR on your behalf and all those things. Please ensure that it is not acceptable, it is not permissible also. Even if you give some money to a political party and they are in turn spending something, some activity covered under Schedule 7, it is not permitted, because you as per the rules, a company can spend the CSR money on its own or through a qualified implementing agency. So if you are giving the money to a third party who is not qualified to implement the CSR project or activities, that is not a CSR activity as such. Then as far as your employees are concerned, the definition of for the employees, you have to refer to the clause K of section 2 of Code of Wages Act, and any activity which is benefiting your employees, again, it is not covered under CSR. Any sponsorship basis, sometimes, it so happens that any kind of relief activities, for whether it is earthquakes, whether it is any kind of flood or any force majeure things, that point of time, please ensure that when you are contributing any kind of CSR activity, that should not carry your company's name and other things very as if it is giving a kind of a advertisement kind of thing. That should not be there. Please ensure that. Then activities, this is, I already told you that any kind of statutory obligations or sectoral obligations which you are discharging it, though it is covered under Schedule 7, but it will not be a corporate social responsibility as such. Ashwini, is there any questions pertaining to corporate social responsibility so far for this particular slide?
No, sir. Most of the questions are on the excess amount spent and all of that.
Fine. Okay, Dolly, go ahead then.
Yeah. So let us understand the definition of net profit. Net profit means the net profit of the company as per its financial statement prepared in accordance with the applicable provisions of the Act, that is Section 198, but shall not include the following, namely, any profit arising from the overseas branch or branches of the company, whether operated as a separate company or the otherwise. So basically, to the organization or any profit which is arising from the overseas branch, whether it is operated as separate company or the other case, it is not included in the net profit.
So there is a question whether gains on short-term investment are to be deducted while arriving at the profit, as this is income not generated in ordinary course of business.
Sorry, the question, can you repeat, Ashwini?
Yes, sir. The whether gains on short-term investment are to be deducted while arriving at adjusted profit, as this is income not generated in the ordinary course of business.
No, this will be taken as a profit, part of the profit. It talks about profit arising from any overseas branch, that we don't have to consider it. Or any dividend which we have received from any company and the company is doing such CSR contribution, those dividend amount has to be not considered for the profit calculation. These two. But if we are investing and we are making profit or the income from there, that will be considered as a investment income and that will be added as the net profit of the company.
So there's one more question. Profit on sale of immovable property, should it be excluded?
No, this is also will considered as a profit calculation.
So basically, sir, 198 is clearly defining what is to be added and what is to be deducted. Yes.
Actually, see that sorry, Ashwini, what is to be done is that one has to take the profit as per the statement of profit and loss account. After that, you have to see whatever exemptions are there, they may be taken out. And apart from that thing, you have to compute the profit as per section 198, on which you have to spend the 2% of that money, average previous year, 3 years profits.
So the profit before tax is to be taken, sir, right?
Correct. Yeah. Profit before tax. Absolutely.
Yeah.
If
Any
I'm
more
not
questions?
wrong, in one of the MCA FAQs also, this has been given clear.
Yes, sir. I was coming to that point. The FAQs are very clearly mentioning.
Yes. Even ICSI FAQs also, it has been very clearly given that profit
Yes.
is to be taken always before the tax. Yeah.
Ashwini ma'am, can I, any more questions?
Yes. You can go ahead. Yes.
Okay. So again, in net profit, it shall not include any dividend received from the other companies in India, which are covered under and complying with the provisions of Section 135 of the Act. Provided that in case of a foreign company, net profit means the net profit of such company as per P&L, that is the profit and loss account, prepared in terms of subsection 1 of section 135. So in case of basically here, in case of a foreign company, they have to follow the format, and the section is given under the section 381, also along with the section 198. Any more questions?
No.
Okay. Also, under the Act, it is given the definition for the administrative overheads. So, administrative overheads means the expenses incurred by the company for general management and administration of CSR functions in the company. But it shall not include the expenses directly incurred for the designing, implementation, monitoring, and evaluation of a particular CSR project or program. So, Sudhakar sir, would you like to add anything?
Yes. Yeah. See that in case of administrative overheads, always a question comes whether the administrative overheads incurred by the implementing agency can it be covered under that 5%. And sometimes the question also has come is the company has not incurred any administrative overheads, but the implementing agency is incurring such expenditure. Any expenditure incurred by the implementing agency is not part of administrative overheads, because it is very clearly said that administrative overheads means the expenses incurred by the company. So the company has to incur the expenditure, not the implementing agency. And what is that for the general management and administration? That means what? The company, whatever the expenditure which is incurring for the general management and administrative activities of the CSR. Means suppose if the company is deputing 2-3 of its employees or 4-5 of its employees, that employee's salary, if they want to debit, yes, it will be a part of administrative overheads. Their travel may be there, other administrative overheads which it is incurring for such particular purpose, it will be. What is not covered in the administrative overheads, it is very clearly given that designing, implementation, monitoring, etc., they are not covered. It is very clear. There is no ambiguity at all. Now, a question comes that the employees who are thick and thin into the CSR activities, their salaries and all, where it is to be taken. Their salaries are not part of administrative overheads, but their salaries and all the other expenditure is part of the CSR project itself. Okay.
Yes, sir.
Yeah.
So, let's know the meaning of ongoing project given under the Rule 2. Ongoing project means a multi-year project undertaken by a company in fulfillment of its CSR obligation, having the timelines of not exceeding 3 years, excluding the financial year in which it has commenced. So, for example, it has commenced in the year 2023. Then to calculate that 3 years, we will be excluding this 2023 year financial year, and next 3 financial year we will be considering as a multi-year project, which will be an ongoing project. and shall include such project that was initially not approved as a multi-year project, but whose duration has been extended beyond 1 year by the board based on a reasonable justification.
Hello.
Yeah. So,
Yeah,
Dolly,
tell
1
me.
minute, please.
Hi.
Yeah.
Please go back. I want to add a few things here.
yes.
See, as far as the ongoing project is concerned, it is the timelines are very clear. It said that not exceeding 3 years, excluding the financial year in which it was commenced. That means 1 plus 3, total 4 years. Several times a question has come up that suppose if the project gestation period is there beyond 4 years, then what is to be done? It may suppose the project may be 5 years, maybe 6 years, maybe 8 years, like that it is. So it is definitely one thing is very clear. The ongoing project cannot be for more than 3 years, excluding the financial year in which it has been taken up. So what we have to do is maybe we have to divide that project into different, the entire project into different parts. Say, for example, if I'm taking up I'm taking up a big university or a college, and the acquisition of land. After acquiring the land, construction of the buildings, after the buildings are constructed, setting up the departments, and then commencing the operations, the entire thing may take up, say, for example, 6 to 8 years time. But suppose, say, for example, I am dividing into acquiring land and construction of the building, that is one project. After that, then setting up the department or purchasing the apparatus, purchasing the equipment and all, it may be in the second wing, and the operations in the third part. Like that, it is depending upon the project. It is to be divided into bits and pieces, and that should be ensured that it should not be beyond 1 plus 3, 4 years total. And similarly, when we are taking, suppose, the CSR activities, when the board is approving, as we know very well, whatever the CSR activities, though they are covered under Schedule 7, and recommended by the CSR committee, ultimately it is the board which has to approve those activities. It may so happen half the way through, the company has realized that it cannot be taken as a CSR program and an activity. For the sake of understanding, we may say that CSR program and activity means it is a short-term ones which may be completed within a 1 year period. Ongoing project means if it is having a spillover of next year, it is multi-year project. It may be 1 plus 1, 2 years, maybe 1 plus 2, 3 years, like that it is. In between, can we change the CSR activity into an ongoing project? Answer is yes, it can be done, provided the CSR committee has to review that. It has to recommend that this CSR activity is to be converted into an ongoing project. And it has to also, while recommending it to the board, it has to give a proper justification under what circumstances that CSR activity is being converted into a project. Then the board has to consider that and approve it finally, whether it is an ongoing project. And then, of course, that, as I told you, the proper justification should be there. And this particular activity may also to be covered in its board's report.
So the board has the discretion to say that it is a ongoing project, right, sir?
Correct. It is yes, board has the discretion to do that. Suppose, for example, even if the CSR committee is recommending and the board is not convinced that it is to be converted into an ongoing project, board can always say, no, let us, finish it up as a program only. That is, within 1 year itself, let us finish it up.
Yes,
so
just
the
to add
has to be
that,
done within the year.
No, see.
Not post 31st.
Let me add one more thing also. Say, for example, the CSR activity, Rakesh, just 1 minute, I take your time before I invite you. Let me just complete this. Say, for example, a CSR activity or a program which has been conceived by the company, for whatever the reasons it is, first 6 months, they were sitting idle. They have not taken up the project. Now what happened is that they realized that in the remaining 6 months, I cannot complete it. So I want to convert it into a project, ongoing project. That you cannot do it. That's why it says that despite the fact that the discretion is there with the board, there should be proper justification. You cannot just say because of your incompetency, for whatever the reasons it is, you are not able to take up the project well on time. And because of that, you want to convert it to an ongoing project. That is not permitted. Yeah, Rakesh, please do that. Please add your point.
Yeah, thank you. Just to inform just to add that generally, once you are doing the CSR activity in your company and you are submitting your paper to the board for approval, like the project for the year, what are the CSR activities we have to do. In the first meeting itself, it is always better to go with the plan that whether it's an ongoing project or not. If you are doing, it is the best practice. But on a few activities, like suppose, for example, you have given construction of any of those school or any of the project, any hospital or anything, and you initially your thought was that it's fine, we can construct it within a year. But we find that after 6 months, land acquisition approval of the government authority, etc., is taking time, and you are not able to construct within it within the time period of 1 year, then in the next meeting within the year itself, you call the meeting and come up with the explanation that you can't construct or to complete this activity within a year, and accordingly you can make it as an ongoing project with a maximum limit of 3 years extension. So this is just addition to the what we are discussing on.
Perfect.
Yeah. So any more question on this point?
No, you can go ahead.
Okay. So let us start with the CSR expenditure. So subsection 5 of section 135 talks about that the board of every company shall ensure that the company spends in every financial year at least 2% of the average net profit of the company made during the 3 immediately preceding financial years in pursuance of their CSR policy. So in a case where company has not completed the 3 financial years, company can consider the CSR spending since its incorporation during such immediately preceding financial years. So let's say the company has completed just 2 financial years and the CSR is applicable on the company. So company can consider for the purpose of calculating that 2%, company can consider that 2 financial years. Company shall give preference to the local area and area around it where it operates for spending the amount earmarked for CSR activities. If the company fails to spend such amount, company is supposed to give the reasons for not spending the amount under their board report.
Yeah. 1 minute, Dolly. I want to add some points here.
Yeah. Yes.
See that the last paragraph, if the company fails to spend such amount, the board shall in its report made under clause O of subsection 3 of section 135 specify the reasons for not spending the amount. In fact, earlier we have all taken that it is a comply or explain approach. Yeah. That means if I am not able to do it, I will just mention it in the board's report. So it was interpreted more or less like as if it is not mandatory, which was not the intention of the regulator. They were always saying that only by exception, if you are not able to spend the money for any reason, that is to be given in the board's report. But the interpretation taken by the corporates were slightly different. And if you remember that, if I am not wrong, in the year 2016 and 2017, several companies have received show cause notices asking that whether are you liable to spend CSR money? If so, how much you are supposed to spend, how much you have spent, all the details that they have collected it. In addition to that, the regulator finds that this amount of CSR expenditure, instead of going up, overall it was coming down. And they were a bit upset about that. And in fact, in the Companies Amendment Act 2019, they were about to trigger the criminal penal provisions for non-compliance of CSR. There was a big furor about that, and ultimately better sense prevailed, and they managed, under the Companies Amendment Act 2020, the penal provision, the criminal penal provisions have been withdrawn. But one thing with all these things, what we as compliance officers have to learn a lesson is that CSR is not to be taken lightly, and whatever the interpretations we are taking it, we should ensure that the way we are supposed to interpret that, we have to interpret it as conservatively as possible according to me. And because whenever we say that at the end of the day, when the regulator comes at that point of time, if we are taking a interpretation slightly different to that of what the regulator is expecting, that is one of the reasons why the FAQs, MCA has come with the FAQs, they have given their mindset very clearly. And more or less in one of the forums, in fact, they have mentioned very clearly that this is what the ministry is expecting the corporates to do it. And at the same point of time, where the company is not completed, this was also one of the reasons, because this was actually, if I am not wrong, this amendment has come in 2017, I think, or by way of a, I'm not sure, I think it is 2017 only to my knowledge, because there was earlier, again, an issue that a company which has not established for a period of 3 years, there was one school of thought that it is to be interpreted as if it is not applicable. The applicability of section 135 will come only after 3 years of existence of the company. So some of us at that point of time were having a different view, but majority view was that only after completion of 3 years only. That was one way of interpretation of that, which was not correct according to me at that point of time also. And ultimately, now that thing has been clarified. If it is 2 years, 2 years. If it is 1 year, 1 year. If it is 3 years plus, then the average is to be taken out accordingly. Rakesh, would you like to add something?
Yeah, just one thing about the local area, the preference local area of our contribution. Generally, the question comes in the mind that which will be the local area for us to do the contribution. Just to add that if I talk about the company which is giving service pan-India, like a State Bank of India, if we consider that which will be the local area of that bank, then we can do that. We can do pan-India, anywhere we can do the CSR activity that will be considered as a local area of the company. But suppose any company which is a state limitation, that within the state only they do the activity. In that case, they have to think about that where they have to do the contribution, and that contribution in that state is particularly. They can't do in the other states. If they are doing, there should be the proper reason of that, because the provision says company shall give preference. It is not mandated. The local area, the preference is the local area and the surrounding and the area around it. Then you will have to give the proper justification of it, that why we are going to beyond the local area. So this is the limited my comment on this line.
Yeah, in fact, Rakesh, you have brought in a very good point. One or two things I would like to add further as far as the local area is concerned. This was recently somebody asked me this question that, say, for example, a state like Gujarat, where Reliance is having its refinery, then said that if the state is, suppose, say, for example, you are promoting educational activities as well as the health related issues, and the state is self-sufficient. Do I need to still do because it is a local area for me, or can I go it beyond that? Say, for example, for a moment, let me take it that Reliance is having its activities only in the state of Gujarat, but not pan-India, for example. Can I go beyond that? Answer to that is yes, as Rakesh ji has rightly mentioned that it is only preference to be given. But suppose my local areas are self-sustained as far as the activities in which I am entering into, then of course I can go beyond that. The purpose of CSR is that across the nation, that it should not happen only some certain parts of India are getting developed and certain parts of India are completely ignored. That is objective is that especially the interiors where they are not developed, where the health facilities are not there, educational facilities are not there, eradication of poverty is not there. Those are the areas to be taken up, but not at the cost of the local areas. First, local areas to be taken care of, and after that, it is the prerogative of the company to decide where it wants to go in.
Absolutely.
Thank you. Yes, Dolly, please go ahead.
Yes. So, yeah. So let us understand about the what company is supposed to do of the with the unspent amount on of CSR activities. So under the subsection 5 of section 135, there is a one clause for transfer of unspent amount. So for first, they have given for the amount which is other than ongoing project. So for the amount which is other than ongoing project, company is supposed to transfer it within the 6 months from the end of the financial year. They have to transfer it to the fund specified under Schedule 7. So the fund names are given under Schedule 7 are Prime Minister National Relief Fund, PM Care Fund, Clean Ganga Fund set up by central government for rejuvenation of River Ganga, Swachh Bharat Kosh set up by central government for promotion of sanitation. So under this 5 fund, company is supposed to transfer the fund for other than ongoing project within the 6 months of the end of financial year. So now what company can do with the excess amount spent? So under
Dolly, before you go for the excess amount spent, let us talk about the unspent amount only, first of all, right?
Okay.
So when we are talking about the unspent money, which is to be transferred within a period of 6 months from the financial year ending. Say, for example, 31st March 2022, the company could not spend the money. So they have to transfer that before 30th of September 2022 to the specified funds. Several times the question comes that within that 6 months, we will spend that money for the CSR activities instead of transferring that money to the specified fund. It is not permitted. Once you have your 31st March cutoff is over, you cannot spend that money for any purpose other than transferring that money to the specified fund only. Number one. Number two, when we said that CSR expenditure does not mean by merely cutting a check and giving it to the implementing agency. Several times this used to be there on the last week of the month of March or the second week of March. Earlier, they used to just cut a check and giving it to the implementing agency and say that, look, as far as I am concerned, I have discharged my social CSR expenditure is concerned. No, it is not permitted. Till last Naya Paisa, you have to spend that money before 31st of March. Whether you do it directly or you do it through your implementing agency, it doesn't matter. You cannot wake up in the last month of March and then saying that I have given the money and my implementing agency has not spent and all. These excuses are not there. One has to realize very clearly that the implementing agency is nothing but your extended arm only. The implementing agency is your agent. So whether you do it as a principal on your own or you do it through your agent, ultimately at the end of the day, the responsibility of discharging the CSR obligations, it depends upon the company only. Another question has come up is that, suppose I have given the money to my implementing agency, they have not spent the money and they are not even refunding my money. What I have to do when my implementing agency is not refunding the money? What can I do? That is a simple civil dispute. You have to file a case for recovery of that money from your implementing agency. That is a problem between you and your implementing agency. As far as the Companies Act obligations are concerned, you have not spent the money. You are supposed to transfer that money to the specified fund. Several times I have been asked this question. You mean to say we have to borrow the money? Yes, if it is so, if you are not having the liquidity to deposit the money with the specified fund, if you have to borrow, you have to borrow. Whatever you do it, but as far at the end of the day, if you are not able to spend the money before 31st of March, you have to transfer the money to CSR, the specified funds. In fact, I don't know whether Dolly, you covered this aspect or not. These rules have come from 21st of January 2021. Okay. Yes, so a question has come up that whatever the money which was unspent in the previous years, do we need to transfer that money also to the specified fund or not? Any rules, whenever they have notified, unless until it is clearly specified in the rule itself that is applicable with retrospective effect, always the rules, amended rules are always applicable in the prospective effect only. However, that doesn't mean that these rules will come into force from 21st January 2021. So I will take only the 3 months portion. No, it is not so. The rules which have come into force, that will be for the entire financial year. So 21-22 financial year is to be picked up. if any money not spent in the financial year 21-22, it is to be transferred within 6 months to the specified fund account. For the prior years, even if the money has not been spent, you don't need to transfer anything to the specified fund. Another question has come up. Suppose the company has made a provision for the unspent CSR money. When there is a provision is there in the financial statements, do we need to transfer that money to the specified fund? Again, answer is no. By merely making a provision or not making a provision, the law is not going to get changed. So you have voluntarily made a provision. If you want, by all means, you can spend that money. If you don't want to spend the money, write back that provision in your financial statements. There is absolutely no problem. Okay. Yeah, Dolly, go ahead, please.
Yeah. So yeah. So what about the ongoing project? So the company who is spending on the project which is
1 minute,
ongoing.
I think that excess money you are not covered, Dolly, if I'm not wrong.
Yeah. Yes, sir. So actually, I thought to first cover this and then we can
Okay, fine.
Yes, sir. So for ongoing project, the company is supposed to transfer that within the 30 days from the end of the financial year. Company is supposed to open the special account in any scheduled bank named as a unspent CSR account, and they have to transfer that such amount within the timeline given for 30 days from the end of financial year. And the company is supposed to spend that amount within the 3 financial year from the date of such transfer. After 3 financial years, if anything remains unspent, the same need to be transferred to the fund specified in Schedule 7 within 30 days, within the period of 30 days from the date of completion of the 3rd financial year. So let's say the company as on 31st March 22, company is having some unspent amount on ongoing project. So within 30 days from the end of financial year, so that is means by 30th April, company is supposed to open the special account and transfer that unspent amount of ongoing project. And then later on within 3 financial year, so from 31st March 23, 31st March 26 till 31st March 26, the company is supposed to utilize that amount. But still, if any amount remains in that unspent account within the period of 30 days, that is again by 30th April 2026, company is supposed to transfer that amount in the schedule fund specified in Schedule 7.
Yeah, 1 or 2 points I would like to add here. And a question has come up several times. I have been asked is that for this bank account which is to be opened, do I need to open separate bank account project wise, or we can open only one bank account for a financial year?
Only one account.
Pardon?
Yes, sir. Yes, sir. Yeah. Yes, sir. Please continue.
Sorry. So there is no need to open as many bank accounts for the project. Suppose there are 4 or 5 ongoing projects out there. You don't need to open project-wise unspent CSR account. One account itself is sufficient. Then the question comes whether I have to open the account financial year-wise, or for the future also I can open in the same account. It is always advisable to have financial year-wise account, because it said that open a special account in any scheduled bank named as so-and-so and transfer such amount. So it is expected that you have to maintain clearly that what is the unspent amount, how much you are transferred, when you are transferred, and how it was spent within that 1 + 3 financial years. So it is advisable to open one financial year, one unspent CSR account. No need to have ongoing project-wise accounts. Another question come up that why the regulator has given only 30 days time for transferring the ongoing project unspent money, whereas 6 months time for the which is not an ongoing project. In this particular case, you are supposed to start, continuously spend the money. So you will not be given that leverage of handling that money for a period of 6 months. That's why they have said very clearly that within 30 days, you have to ensure that spend that, put the money in a separate bank account. So it will not be in your control to spend the money somewhere else. And tomorrow you will end up not having any liquidity for that particular purpose. That's why they are asking you to spend within 30 days only the specified fund account. Fortunately, in the case of other thing, which is to transfer to specified fund account, which is not an ongoing project, 6 months leeway has been given. In fact, okay, let us enjoy that period, whatever has been given, but ensure only one thing, that well in time, though you can utilize that money for a period of almost 6 months, the last day of the month, you have to ensure that you should be able to deposit that in the specified fund. Otherwise, you will attract that severe penal provisions which are envisaged in subsection 7.
Yeah, Dolly, just to add here,
Yes.
if we suppose we have already transferred the fund to a separate bank account and spend a CSR account, and that is, of course, rightly said that it should not be the project wise, it should be the financial year wise. It is advisable, or not only advisable, it should be done. That is the right practice to do it. But whatever the income, if you generate from that account, suppose the money is, we have kept it in a particular bank account and we are getting interest. So that interest will be your unspent amount for that project, and you have to spend it within the 3 years. That just simply to add it.
Okay, sir.
Yeah.
So, any questions for this particular topic?
Hi, I'm Naishad Mankar. I just wanted to get a clarification for ongoing project when we transfer the amount to special account, whether it will be contribution for the year in which it is transferred or for the year of the CSR obligation. To the CSR obligation.
So I'm not clear about the question.
Yeah, sir, can you please repeat?
I'm just saying, say for the year 22-23, I'm supposed to spend say 5 lakh rupees, and I identify a project as an ongoing project, and I deposit say 3 lakh rupees. 2 lakh rupees I spend in the current year before 31st March toward that project, and 3 lakh rupees I deposit in next year within 30 days in the special account. So
correct.
Will the entire 5 lakh be treated as my contribution for 22-23 or 2 lakh for 22-23 and balance 3 lakh?
No. The entire will be treated as if it is 22-23.
Exactly.
Right. The 2 lakh rupees you have spent, the 3 lakh rupees you have deposited, which you will be spending it in the next 3 years.
Correct.
Also, please remember that because your obligation under 22-23 is 5 lakh rupees, that 3 lakh rupees which you will be spending in 23-24 or 24-25, whatever it is, it will be treated as if your CSR expenditure for 22-23 only, exactly. Not for the respective financial years.
That is the exact explanation. Yeah. Thank you.
Okay.
I have
one more thing. Sorry, one more thing also, as Rakesh has mentioned about the interest aspect, as far as this is concerned. Sometimes it may so happen that the company, when you are discharging this ongoing project and all that, there may be some miscellaneous income generation also. Like suppose there is a scrap which is sold, or any kind of extra income what is generated because of that CSR activities. That money is also to be spent for CSR activities only, or transfer it to a specified fund. But you cannot use the money for any purpose other than CSR. Any income generated.
I have one question. Yes. My name is Pratyaksh. Can you just go one slide back, please?
Sure.
Okay. No, back.
On expenditure?
Yes.
Okay.
In this, I just want to obtain some clarity. It says at least 2% of the average net profits made during the 3 immediately preceding financial years. So I just want to take an example to get some clarity, because when we do some calculation, I've been facing a lot of interpretation issues in this case. So, for example, a company in one financial year has crossed the criteria as per the 135(1). So let's directly say in the year 2022, they've crossed the criteria. So before the end of 2023, they would have to make the expenditure according to this calculation mentioned over here, at least 2% of the average net profits. So this 3 immediately preceding financials will constitute the profits made in 2022, 21, and 20, or the year in which this trigger has come has to be excluded from it, from the calculation part?
So let's say if for financial year 23-24, first we will be checking the applicability of the CSR. So for that, you will be checking the criteria of year 22 and 23. If it gets triggered, then you will CSR is applicable. Okay. And if it is the financial year is 23 and 24, then you will be checking the immediately 3 financial years net profit. Okay. So immediately financial 3 years means you don't have to consider the financial year 23-24. That is the current financial year.
No, definitely I won't be taking 23-22 because I think this would create confusion. I'm basically considering that the year which has crossed the criteria. So would that year also become a part of my 3 immediately preceding financial years calculation?
Yes, it will be. It will be the part of 3 immediately.
Okay, because I've been facing issues on the point that actually my company follows calendar year as the financial year. So in December 21 financials, our company crossed the net profit criteria. Before that, it never crossed. So definitely in the year 2022, we have to make the CSR expenditure on the basis of 3 preceding financial years.
Yes.
So definitely we'll be taking 21, 20, and 19. Or we have to exclude 21, and that's what I want to obtain clarity on this.
Okay. So
this is Balaji here. On the reporting on the unspent, as per section 134, is it after the 3-year period or is it a year-on-year period that it needs to be reported by the board on the unspent?
If it is an ongoing project, when you are filing your annual report on CSR, you have to clearly give all these details. So in the board report, you don't need to give specifically how much is the unspent money unless until you have transferred something to a specified fund account. That, of course, you have to cover in your board's report. As far as when you have opened a separate bank account and you have transferred that money and all those things, you don't need to do it separately.
Thank you so much.
Yeah. So the section 135 subsection 5 talks about the excess amount spent. So in case the company spends on CSR activities in excess of its obligation of 2% of average net profit for 3 years, then the company can take a set off of such expenses spent against the obligation in immediate succeeding 3 financial years, subject to the following 2 conditions. Excess amount available for set-off shall not include the surplus arising out of CSR activities. Also, the board is required to pass the resolution for that effect. Rule 7, sub-rule 1 talks about the cap on administrative overheads. So CSR expenditure states that the board shall ensure that the administrative overhead shall not exceed 5% of the total CSR expenditure of the company for the financial year. Also, if there is,
Dolly, just to add here that we have discussion on administrative overheads. So first of all, I like to tell the participants or those who are doing the CSR contribution, it should not taken like just like an obligation because it is mentioned in the Companies Act and we have to spend. If we will have that kind of thought, then all these questions will arise that 5% administrative overhead, what amount, what should be covered, what should not be covered. Why I'm saying this question is to the participants, because there is a limit of 5%. And suppose if my total CSR contribution is 1 crore rupees in any financial year, and in that financial year, I am going for preparing any video for the CSR activities, which we have done. If we go with the impact assessment, of course, impact assessment is excluded from the administrative cost. Intentionally, it is excluded. Why I'm saying, because these costs are very huge. If today you go for the impact assessment, or if you go for the video, preparing the video, it takes minimum 10 to 15 lakhs they charge. So it will definitely cross your 5% of the total expense, the administrative limit. So we should be generous on this, and we should not take like these expenses as a part of the administrative expenses, and then it will create the issue. So my thought is we should be very from the heart, we have to do the CSR activity. It is not taken simply like an obligation to do the CSR activities. And the 5% is the limit, which also we should keep in our mind, that we should not pass on to cross this limit. So this is the limited suggestion from my side.
Yes, sir, definitely. So moving onwards, surplus from CSR. So in a case where company is having any surplus arising out of the CSR activities, it should not form part of the business profit of the company. And the treatment is given for such surpluses. The company is supposed to plug back into the same project, or shall be transferred to the unspent CSR account. Any unspent CSR account amount need to be spent by the company as per its CSR policy, and also annual action plan of the company, or to be transferred to the specific fund, which is specified again under the Schedule 7 within a period of 6 months from the end of the financial year. So here we talk about the set-off of excess CSR amount, which is already we have discussed. So moving onwards, there is a sub-rule 4 under the Rule 7 about the capital asset. It talks about the CSR amount may be spent by a company for a creation or acquisition of a capital asset, which shall be held by a company established under Section 8 of the Act, or a registered public trust, or a registered society having charitable object and CSR registration number, which entity gets on filing of Form CSR 1. So the capital asset, which should be held by a company which is having the form CSR 1 registration number by filing the CSR 1 form, or beneficiaries of the state CSR project in the form of self-help groups, collectives, or entities, or a public authority. Any capital asset created by a company prior to the commencement of the company's CSR Amendment Rules 2021 shall, within a period of 180 days from such commencement, compliance with this requirement, which may be extended for a further period of 90 days with the approval of the board based on a reasonable justification given by them. Sudhakar sir, would you or Rakesh sir, would you like to add anything on this point for the capital asset?
I think things are very clear over here that capital asset, my always suggestion is, if you are creating practical things I'm talking about, and the technical things Sudhakar sir will take it. Sudhakar sir explained it. A practical thing I like to tell you that always better to not to create the capital asset in the name of the company once you are doing the CSR activities. So then all this such compliances starts coming, and you have to do all declaration, etc. And then if the profit generation, all how to deal with all such things will start up. So better the capital asset, whichever you are creating for the society, you hand it over to the society. Suppose, for example, I'm giving that for my project, I'm creating one school in one of the my place where we are doing the CSR activity. We will not take it in that school in the name of the company. We will hand it over to the society, to the relevant authority, that this which we created on request of the society, and we are handing over to the society or the relevant authority. So always better, or always to avoid creating capital asset to come out from all these compliances, etc. So my suggestion is, don't create capital asset for the CSR through the CSR activities. There's technical things.
Yeah. See that earlier, what was happening, that companies were, whatever the expenditure which was incurring on the capital expenditure, it was shown in the financial statements of the company itself, because the capital assets were held in the name of the company. And some companies were even taking the depreciation benefit also on that immobile properties wherever they are there. Subsequent, certain companies, what they were doing is they were clearly identifying that CSR assets separately, and they were not claiming any kind of depreciation. But there also what used to happen was it was coming in the balance sheet, and then several times it is coming in the part of the net worth also. Though they were not claiming it as if it is the asset of the company, and they were not claiming any depreciation. But sometimes it was getting pushed as if it is a part of their net worth. So now the rules, when they got amended, it has come out very clearly that any capital asset is not to be in the name of the company. That is to be, as Rakesh has rightly mentioned, it should be there in the name of that. Whatever you may say, that once you build up the asset, it is to be handed over to the society. Means it may be a village panchayat, maybe you may form a trust that you have to hand it over to the trust. The trust will run that, like that it is. At the same point of time, whatever the assets you are already having it in your name, those are also to be transferred within the prescribed time period. In fact, when we met the Joint Secretary of Ministry of Corporate Affairs, that time we have asked him one question, because it was in the minds of everybody that when you were transferring that asset, that capital asset, the companies were to incur huge what's called as stamp duty expenditure. Whether that stamp duty, who has to incur that? Obviously, it is the person who is transferring it. He has to do it, because the person who is taking that asset, he will not be in a position, because he is a part of the society only, the Gram Panchayat or NGOs or the trust, whatever it is and all. So it is the company which has to incur it. Now, question is, can that stamp duty be a part of my CSR expenditure? Fortunately, the ministry said that yes, it is a part of your CSR only. So any kind of stamp duty, whatever you are incurring while transferring that capital asset to anybody else, it will be that the stamp duty expenditure, whatever you have incurred, it will be a part of your CSR only.
Yes.
Yeah, go ahead.
Yeah. So moving onward, this is the data we have taken from the National CSR portal, where we can, see the top 10 states which are spending on the CSR. This is the list of the top 10 companies which is spending the highest on the CSR in India. Also, here we can see the on which development sector the highest CSR spend is going on by the companies. So highest, as we can see, it is a majority on the rural development, health and sanitation, PM Care Fund. So moving onwards, as we have discussion so far for the CSR expenditure, let's discuss about the penalty section, which is given under the subsection 7 of the section 135, which has introduced the monetary penalties for the company and every officer in default for non-compliance with the provisions relating to undertaking of CSR expenditure and transfer of unspent CSR account or transfer to the Schedule 7 fund as applicable to them. So here, a defaulting company is now liable for the lesser of rupees 1 crore or twice the amount that should have been transferred to the unspent CSR account or the Schedule 7 specified fund. Also, additionally, a defaulting officer is now liable for the lesser of rupees 2 lakh or 1/10 of the amount that should have been transferred to the unspent CSR account or the Schedule 7 specified fund as applicable to the company. Further, I would like to discuss one case law which happened recently on 27th September 2022. It was about Messrs. Comviva Technologies Limited. So Comviva has to pay the penalty in total of rupees 15,40,341 rupees. So the case study was about just a second. So case study was about the company failed to check the actual transfer of the unspent CSR amount in the bank account. So basically, they have transferred the amount within the timeline, but they failed to exactly check and that exactly the amount got credited in unspent CSR account or not. And for that mistake, they have to pay the penalty in totality of 15,40,341. And the CFO and CS and the MD, they were penalized for rupees 55,012 rupees each. 10% of the amount not transferred, while the company was penalized for 11,244,000. That was the twice the amount of untransferred amount. So basically, the unspent amount was of rupees 5,50,122, was not transferred to the specified account in time. And for that mistake, they have to pay the penalty of 15,40,341.
And one more thing I would like to add here, Dolly, is that these penal provisions, what you have mentioned in your previous slide, that is for the non-compliance of subsection 5 and subsection 6.
Yes.
This is not for the non-compliance of section 135. The penal provisions which are there under subsection 7 is only for the purpose of non-compliance of the expenditure, that is 5 and 6. As far as other things are concerned, where 135 other provisions are concerned, that will be the penal provisions are there under 450 only.
Yes.
That is not, these stringent provisions are not applicable for the other non-compliances.
Yes, yes, sir.
Yeah.
So this is specifically for the CSR expenditure and the transfer to unspent CSR account.
Yeah.
So my question
Yes, go ahead,
is,
Dolly, quickly go ahead.
Yeah. So first is excess expenditure incurred or expenditure incurred voluntarily prior to the amended rules, whether to available for set off or not. So it is given under the MCA FAQs issued by MCA in I think 2021. As the rules are prospective only for financial year 2021 onwards, it is available and not the it is not available for the prior to 2021. For the next 2 years, if there is no obligation to the company to spend for CSR, how to compute the 3 years? So as we have discussed for earlier years, such set-off is available only for 3 years. Thereafter, the same shall be lapsed.
See that here in this particular question, what it was trying to say is the excess expenditure, whatever is there, it will be eligible to claim set-off in the next 3 financial years. For example, you don't have any CSR obligation because of the incurring losses or whatever it is, and your 198 profit average and you are taking it, it is not, you don't have any CSR obligations, and you are not able to set off during the next 3 years. That amount, that set off will be lapsed and you cannot claim it thereafter.
Yeah. The next question is administrative overheads incurred by implementing agency, whether eligible. So I think we have discussed this point earlier also. Administrative overheads means the expenses incurred by the company in general management and administrative CSR functions in the company. Therefore, expenses incurred by implementing agency on the management of CSR shall not amount to the administrative overheads and cannot be claimed by the company as an administrative expenses. So I think it is very clearly given that we cannot consider the overheads incurred by the implementing agency as an administrative overhead. The next question is whether the companies can undertake any CSR activity mentioned under Schedule 7 of the Act for the exclusive benefit of their employees, workers, and their family members. It is very clearly given. The answer is no. Activities for the exclusive benefit of the employees are not considered as a CSR expenditure. However, any activities which is not designed to benefit employees only, but the public at large, that can be considered as a CSR expenditure. Also, if the employees and their family members are incidental beneficiaries, then such activities would not be considered as activity benefiting employees and will qualify as CSR eligible CSR expenditure.
See, it is not only benefiting the employees. Any activity, whatever you are taking up, if you are restricting to a particular section of people, it is not CSR. It should be to the public at large. Say, for example, you are doing some activity which is only for your exclusively for your vendors, for your dealers, for your shareholders. It is not permitted. What you have to do is it should be public at large, And in this process, if your shareholders, if your employees, if your vendors, suppliers, if they are getting covered, that is not a problem. So anything, any activity, if you are restricting it for a particular segment of population, it is not a corporate social responsibility.
Okay, okay. So the next question is about the penalty provisions. So the panel proceedings apply even after the unspent amount has been transferred to the unspent CSR account mentioned in Schedule 7 of the Act. The penalty does not relieve the company of the obligation under the law, and the penalty is over and above the obligated amount required to be transferred. So basically the penalty is the consequence of not abiding by the law and not an alternative for the same.
Correct.
Yeah. The last question is, what are the penal provisions relating to non-compliance with the provisions other than section 135, subsection 5 and subsection 6 of the Act? So Sudhakar sir has already given the answer that for the non-compliances of any matter other than the section 135, subsection 5 and 6, the section 450 will be applicable. Further, in case of non-payment of penalty within the stipulated period, the provisions of section 454 will be applicable.
Today there is a record attendance, I think 270 plus
Yeah.
are the participants, and
Yes,
this shows the importance of this subject and the kind of clarifications what the fraternity requires. Maybe from Mehta and Mehta, let us try to do this particular job.
Yes, sir. Yes. So thank you, everyone. Thank you for your time, Sudhakar sir and Rakesh sir, for giving your inputs. Let's just conclude this webinar. And whatever queries you have, I have already mentioned the email ID. You can write to us, and we will be answering your queries. Thank you, everyone.
Everyone, thanks participant.
Thank you.
Thanks Sudhakar. Thanks Rakesh ji. Thank you.
Thanks so much, sir.
Thank you. Thanks Dolly.
Thank you, ma'am.
All participants keep on attending this way and we participate this way. Thanks a lot.
Thank you.
Thank you. Thanks for giving opportunity. Thanks a lot.
Thank you.